Hi, my name is Steph Chalk, and I'm with the Plan Sponsor University. I'm here today with Maria Hurd. Maria has been a panelist with the Plan Sponsor University a number of times, and today I'm going to be interviewing Maria with regard to the audit function itself. So with that, I'm going to ask, are you okay if we ask you some questions?
Absolutely.
Great. And would you introduce yourself and your firm, please?
My name is Maria Hurd from Belfint, Lyons & Schumann. It's a CPA firm in Wilmington, Delaware.
Okay. And what's the specialty of the firm?
The CPA firm is a full-service firm, so it does have several departments, but amongst those departments is a niche area that specializes exclusively in audits of employee benefit plans.
Good. And that's your area, is that correct?
That is my area.
Okay,
Yes.
Fantastic. And today we had individuals from all different industries and segments of the market, and we also were fortunate enough to have some individuals from the Department of Labor joining us today. So I guess I'd like to ask you first about the Department of Labor study, which talks about the veracity or the quality of the audit function itself, and then get into a little more specifics on what you have seen and how you've treated different situations during the audit.
Oh, most definitely. The DOL studied the quality of financial statement audits, such as the ones I do for plans that cover over 100 participants. And what they found was a nationwide deficiency rate of 40%.
40%?
40% across the nation. And within those deficiencies were just several areas that the auditors had not addressed appropriately or in accordance with the industry standards that regulate the types of functions we have to do when we conduct an audit. What they found, in addition to the 40% nationwide deficiency rate, was a correlation between the number of audits that a firm does and the incidence of deficiencies.
Oh.
And so in the statistics that they publish, and the results of their study are in the DOL website.
Okay.
They're published. You can search for DOL study on audit quality, and it will come up. And what they found was that 95% of the auditors audit fewer than 25 plans.
Okay.
And that's not to say that an auditor that audits 25 plans cannot perform a good audit, but
Sure.
But the fewer the audits, the higher the incidence of deficiency rate. So auditors that only do one or two had a 75% deficiency rate. And what they did with some of those auditors is refer them to the boards of accountancy of their states. And for example, in my firm, we acquired an audit that was rejected as a result of a deficient auditor, and we had to re-audit 3 years and then submit all of our work papers to the DOL for them to verify that the audit had been in fact conducted in an appropriate way. And then they issue a closing letter with respect to that investigation. So it's one of the employer's fiduciary responsibilities to make sure that every service provider that they hire is competent and performing their job well.
Sure.
Including the auditor. So it really behooves every plan sponsor to ask whether the firm that they're engaging has a specialty area, whether the personnel are experienced, how many audits of the type of audit that firm sponsors does the CPA firm audit. How much continuing education do the auditors do that is specifically related to retirement plan audits and not just general, just accounting, CPE. All these different types of questions are part of what they should ask when they engage an auditor, make sure that they obtain a quality audit.
Did the 40% surprise you when you saw the results of the study?
My understanding what other auditors do is basically limited to the takeover engagements that I get. From those engagements, I do see that the quality of the work that we do is superior to many. There are also very many good auditors out there. What we like to offer is value to our clients in the form of assistance in correcting errors when we find them. So we don't want to just give a stamp or point a problem and walk away. We want to be able to assist the plan sponsor in correcting any errors that we find during the audit, so that if the IRS or the DOL ever come, all those mistakes have been properly corrected.
Thank you. And then you also had mentioned during the program that you have I guess a little different way to look at the contribution itself and the timeliness of the contribution in the event of a special situation. And I was hope you could share that with the viewers as well.
Sure. So for the timeliness of deposits, the DOL rule is that the deferral withholding has to be deposited to the plan as soon as it can be reasonably segregated from the employer's assets, but in no event later than the 15th business day of the month following the month of withholding. They're generally looking at patterns of deposit to determine how soon each employer can reasonably segregate the assets from their own assets. So in general, I like to see a very specific pattern in my clients. You know, if it's going to be 3 days or 5 days or 2 days or whatever it is, I like to see an identifiable pattern. But that doesn't mean that if they have a good reason why one of the pay periods went in later, and by
what
good
would you
reason,
consider a good reason to be?
a platform change. Sometimes when there are platform changes, that transition period causes one of the deposits to go in a little bit later than the rest of them. So instead of 3 days, it would be 8 days. Or, I mean, sometimes I like to employers to have a backup so that more than just one person can make those remittances. But at times there's only one person that does it, and maybe the person was away or there was a sickness in the family, and then the deposit went in 1 or 2 days later. And if it's only on an exception basis, I won't necessarily say that deposit has to be considered late, but I do advise my client that the DOL could have a different interpretation for that one deposit in isolation. Having said that, I don't want to see patterns that fluctuate randomly, because in that case, it is clear to me that the fluctuations might have to do with cash flow, in which case the employer is clearly using the participant's money as a loan, and that's what's prohibited. So if you have a platform change and the employer is not really using that money as a loan, it's really just a logistical difficulty that they handled as efficiently as they could. I don't see that as a prohibited transaction.
You would look at that as an explainable variance.
As an explainable variance, and I would say that that's a deposit that was remitted as soon as it could reasonably be segregated from the employer's assets. But random patterns, I find it more difficult to justify.
Okay. And as a result of being here today, is there anything you will be doing differently on your audits? Or I found it interesting that there is a difference in the audit function by firm to firm, as well as what the DOL will look at as well.
I wouldn't say that I would do anything different as a result of this specific event, but I have started helping employers produce their census data in March when they are submitting it to their third-party administrators, because I find that identifying mistakes early on in the process before the third-party administrator conducts a discrimination testing saves a lot of work for all of us at the end. Because if that census is incorrect or incomplete and the third-party administrator completes their testing with an incomplete census, and then I find it later on in the summer, then everybody has to redo their work. And that's sort of inefficient, and also it is better to identify those problems when they can still be corrected prior to the audit.
Okay, and I know a lot of firms that they like to see a clean audit, but maybe there's more value in an audit that doesn't come back and says you're doing everything absolutely correct.
Well, and it comes to prevention instead of detection at times.
Yes.
So I'd rather be the person that assisted the client in preventing errors rather than the person that, just to make my audit worth something,
Sure.
finds
Sure.
it after the mistake has already taken place.
Okay. Well, thank you very much. It's
Thank
a pleasure
you.
having you here
Thank you
today.
for this opportunity.
Appreciate it. And that concludes our program from University of Pennsylvania.